Hey guys, long time no talk, and we're back again with another video. And in today's video, I wanted to go over daily bias more than simplified. And I have an example to show you guys through the dollar index and USDCAD. And before getting into the video, I want to tell you guys a little bit about our sponsor.
If you're looking for a prop firm to trade with, I would recommend Bespoke Funding Program. A prop firm with no time limit, extremely tight spreads, and a safe trading environment with next to zero slippage. I honestly don't think you could go wrong. Bespoke also has a 24-hour working support team that can answer any of your questions and concerns whenever need be. They also have a section on Discord with proof of payouts with the many traders that have made those accomplishments. And so far, my experience with Bespoke has been nothing but satisfaction compared to the many prop firms I've traded with in the past, and I will be with them definitely for the long run. In the description of this video, there will be a link to sign up for any account challenge, and if you use code SNIPER, you will receive 50% off any purchase.
Now, just to start off, I want to show you guys the US dollar index 37-year seasonality. And as you can see, we're currently in the month of October. And if you could look in the month of October, it looks almost like a V shape between the 37-year, the 15-year, and the 5-year chart. This V shape tends to form roughly in about the middle of October or towards the end. And as of right now, we're currently in the second to last week of the month of October. So I'm expecting the dollar index to flip bullish in regards to seasonality. So here is the weekly chart on our dollar index, and I have it divided up into 4 quarters, our Q1, Q2, Q3, and Q4. Our quarter 3 was the quarter that I labeled as manipulation because this was the down close candle that ran our relative equal lows, our sell stops resting below here, and then continued to break structure, forming a weekly bullish breaker block that was traded into with a fair value gap inside our ICT unicorn setup that continued to progress and push higher, reaching our external range liquidity and eventually our long-term target, which is 108 on dollar index. Now, a little bit of insight in regards to the projection that I have here measuring from this swing high to this swing low that took out liquidity and then broke structure. When price reaches the 0.5 to 1 standard deviation, in this exact price zone is where we expect accumulation of longs to occur. And as you can see on our weekly chart, this weekly candle ran sell stops, but then also tagged a weekly bullish fair value gap within this price zone. And you could see based off of the reaction after we ran our sell stops and then tagged this weekly bullish PD array, it was a bullish reaction. Now, moving on to our daily chart that we have resting here, if I measure from this swing low here to this swing high on the dollar index, we could see that the weekly bullish fair value gap lies in an optimal trade entry of that exact price swing. And on top of that, we have a short-term low resting here that then created an intermediate term low here that is potentially setting the low of the week and potentially the low of the month based off of our energetic displacement post running our sell stops and tagging optimal trade entry of the swing and reaching this weekly bullish fair value gap. So understanding kind of and looking at the weekly candle and how it forms, that Monday we can accumulate price, and then Tuesday typically we'll set the high of the week or the low of the week, which is what we're anticipating here after price reaches discount of the range and reaching a higher time frame PD array. We expect expansion after reaching that discount POI. Now, moving on to our hourly chart on the dollar index, you can clearly see here that this was where our low of day was formed, and the low of the day was formed during London kill zone. And once you have a low of day formed during London, that's typically when you are anticipating a classic buy day template. And the classic buy day template is laid out as such, which is Asia lows being manipulated, which is what we ran here. After Asia's lows being manipulated, we then Expect London to set the low of the day, which is what we did here. And then New York session from 7 o'clock to 12, we expect price to continue higher to our buy side liquidity draw. And moving on to our M15 chart on the dollar index, we have a clear depiction of a market maker buy model. And on top of that, I've incorporated Day's quarterly theory, so big credits to him. I think that incorporating quarterly theory with market maker buy and sell models has helped me tremendously in regards to my trading. It has allowed me to understand a better aspect of time and when price is delivered from point A to point B, or external to internal, or internal to external liquidity. But as you can see, we have Q1, which is accumulation, Q2, which is manipulation, the low of the day forming inside of London kill zone here. And once price displaces higher, we form a breakaway gap here that was not traded back into. And then we have price continue trading through this bearish fair value gap, turning it into an inversion. And we have an institutional order flow entry drill right here with the tag. Moving into New York kill zone, which is Q3, our distribution phase, where New York will continue since we are in a classic buy day representation. We have a up close candle on the sell side of the curve, because when any up close candle on the sell side of the curve will be used as a mitigation block on the buy side of the curve, and we would like to see PD arrays form inside of those POIs. And as we can see, we have a 15-minute bullish fair value gap form inside of that mitigation block, which then continues and drives us higher to our buy side liquidity pool, as well as being price supported by this 15-minute bullish order block followed by the fair value gap. Now, in the beginning of the video, I went over the dollar index seasonality chart, and I did say that I wanted to do USDCAD in comparison to dollar index, and that is what I'm doing here, but I'm starting off with analysis on Canadian dollar seasonality chart, and then I'm going to go into the futures chart as well. But looking at Canadian dollar seasonality chart, as you can see, coming into the month of October, looks like when we make our turning point and our shift in regards to seasonality, flipping bearish. Now, looking at our weekly chart on Canadian dollar futures, as you can see, we didn't set the high of the year in October like it said on the seasonality chart, but we were in and currently in a weekly and a daily market maker sell model. And as you can see, we have a tag of this weekly bearish order block. After we tag the weekly bearish order block, this is labeled as our smart money reversal with a short-term run of these highs. We displace lower, running through this low. And then once price reaches its turning point and it's time for a retracement, we have a short-term high here that gets violated, form an intermediate term high that tags premium of the weekly range, and then continues lower to our immediate draw on liquidity, resting at these lows here, and then eventually we'll get out these lows. And looking at our daily chart, I wanted to show that in more of a clear depiction. We have a daily bearish breaker block that gets tagged here, and we break down lower. We form that short-term high that gets violated into premium of the weekly range. After we reach premium of that weekly range, we then tag and take out these external lows. After we take out these external lows, retrace again into premium of this daily swing, which then bleeds us lower, using this inversion gap as resistance, and then this redelivery rebalance as another PD array to reference lower prices, to hopefully then complete our market maker sell model on the weekly and the daily chart. And an understanding is that when Canadian dollar futures are bearish, that would leave USDCAD bullish if dollar index is also bullish. But if dollar index is bearish and CAD futures are bearish, that would typically leave USDCAD in consolidation. So when Canadian dollar is bearish and dollar is bullish, that would leave super bullishness for USDCAD. Now, moving on into a weekly chart, this is a very clear depiction of a weekly market maker buy model. Now, starting from the bottom, we have a weekly bullish order block. And on top of that, relative equal lows are external range liquidity that we formed and framed our smart money reversal off of. After we ran those relative equal lows and tagged our higher time frame PD array, we then displaced higher, running into these external range liquidity highs. And after price reaches external range liquidity, what does it do after that? It seeks internal range liquidity and discount of the swing, which it did right here. After price ran the external highs, it retraces. We find discount of the range. After we find discount of the range, this is our internal range liquidity. We then continue again higher, seeking external again, which is exactly what we did here. Now moving on into our daily chart, you can see our weekly PD arrays that I had referenced here. Once we reached this internal range tag with discount, we had energetic displacement running the external range highs, retracing again into a internal range PD array, this daily bullish fair value gap, and tagging discount of the daily swing. Price then proceeded to push higher, displacing through this daily bearish fair value gap. So we have an inversion gap here as well that's acting as clear support, which then proceeds to push higher, now referencing this down close candle as a daily bullish order block to take out these relative equal highs. And eventually, we'll be taking out and seeking this buy-side liquidity, this external range as well. Now, moving on into our hourly chart on USDCAD, it is kind of the same depiction as we had represented on the dollar index. We have the low of the day forming during London kill zone, as you can see right here. So it's our classic buy day daily profile. Asia lows being manipulated right here, and London setting the low of the day with New York session continuing. Now, if you measure from this swing high to this swing low, that's the 0.62 on a Fibonacci retracement, reaching OTE of the hourly range. And after we reached OTE of the hourly range, you can clearly see what happened there, which was price displacing higher and then using this mitigation block as a reference for New York session to continue to drive price higher, running our buy stops. And if you look to our left, we do have a manipulation leg, which created an hourly breaker block with the fair value gap tag from the 17th of October. And if you measure that manipulation leg from that swing high to that swing low, 2 standard deviations projection lands directly at the buy side liquidity pool. Now moving into the M15 chart on USDCAD, we have our obvious market maker buy model. And this is our daily cycles with Q1 being accumulation, Q2 running Asia lows, setting the low of the day during London kill zone. Price forms a 15-minute breaker block after tagging the OTE of that range. Here, price displaces higher, tagging the breaker and a fair value gap right above the breaker. We have a M15 mitigation block that I drag out in time, which is relied for New York session to continue during Q3's distribution, driving higher to our buy side liquidity pool. Now I wanted to show an accurate representation of what New York session looked like on an M5 chart during the 90-minute cycles of Day's quarterly theory. Now this is the buy side of the curve of this market maker buy model. And if you look at this closely, we have Q1 accumulation. During Q2, this is when price is supposed to manipulate lower to form some sort of sell stop run. And we actually formed SMT with the dollar index because the dollar index made a lower low compared to USD CAD making a higher low, showing that USD was stronger than dollar. So after we had the SMT with the dollar index, and we did have a little stop run here, but post that stop run, we formed displacement, which then created a high probability bullish order block because this is the down close candle that ran that low. And after, you can see, we respected it perfectly. Then we formed another order block here with another fair value gap as well. With Q3 completely delivering higher to run out the buy side liquidity pool with a fair value gap here, a fair value gap here, and we meet our objective right at the end of quarter four's quarterly cycles. Now, before getting into the end of this video, all of my understanding of price delivery and how I have gotten to the point as to where I am today is due to ICT, but also due to the MMXM trader on Twitter. So please give him a follow and also subscribe to his YouTube channel. And I'll also have the same linked for Day or Trader Day on Twitter, link for his Twitter and his YouTube channel as well. So please give them both a follow and a subscribe as well. Mad respect to both of these traders, complete killers in the game. But what you guys have seen here is basically what I do with my Discord live daily during Asia session and New York session as well. So if you are interested, I'll drop the link in the description of this video as well. But if you have any ideas for any future videos, please drop them in the comments below. I hope you guys enjoy this video, you learned something, but I will catch you guys all in the next one.